I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldanoilguy.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
What do the markets look like for you right now? Are they topping out?
Yeah, really, it depends on the market you're talking about, but I think there's a lot of significant changes that are taking place, a lot of major tops being formed, a lot of significant market bottoms being formed. It all depends on the asset class that you're looking at. And the stock market, I talked about in an article just the other day, talking about how it's started to run to new highs. It's up about 2%. And how they're, typically if you get a breakout, you need a breakout of 4% or more before it's considered a new real leg higher in the market. So we're flirting with this new breakout to new highs for the S&P 500, but it has yet to really kind of follow through with legs. It's doing what we've seen every major market top before, where it has a little nominal poke to new high, kind of stalls out and then rolls over. And it usually does this a bunch of times over several months, and then loses its upward momentum, and we see some type of rollover. And that's exactly where I think the large cap equities market is at. I think we keep seeing the market poke to nominal new highs, lose some momentum, and then pull back. And there's not a whole lot of energy behind these moves. Obviously, we had some pretty strong price action with the Brexit news, created a big V-shaped kind of sell-off and recovery, but overall, the momentum to the upside just really isn't there at this point with the volume. There's not a lot of volume behind it. So that's kind of a market that I've been waiting, and I've identified a market top for a long time, but we're still waiting for that top to actually kind of confirm. And it's a long way from confirming. Based on technical analysis and major bull market analysis, we need to see a huge fall in the S&P 500 before it's technically broken down to a bear market. And of course, it's trading at 2176 that we speak right now, and technically it needs to close almost below 1800. So we're talking almost 400 points for it to technically be in a bear market. So, I've been talking about this bear market coming, and it still has a long ways to go before it'll actually be confirmed. And there's other sectors that I think are forming a bottom, which we can touch on, which one of them is natural gas.
What kind of moves are being made in natural gas right now?
Well, natural gas, I talk about it a lot with subscribers because a lot of times we'll see a big sell-off in the stock market, like on a one-day sell-off. And if you go and you look through all the different sectors and commodities, it's funny that the big sell-off days in stocks, we typically see natural gas actually outperform and actually move sharply higher. And I'm actually just working on a little analysis piece I'm going to be posting out shortly, talking about the relationship that natural gas and the stock market kind of have. And if you go back to the 2007, 2008 kind of stock market top, that was when we saw natural gas had been trading sharply lower, building a base, and just as the stock market started to crash and slide, natural gas exploded in value. And we've got a very similar setting happening right now. U.S. stock market is very toppy looking. It's trying to put in a top. And we see natural gas is put in a bottoming formation. It's already in its late stages of the basing pattern. It's already got nice higher highs, lots of momentum behind it. It's very close to breaking out of a stage one base and starting a brand new bull market just while the equities market is about to roll over and I think start a brand new bear market. So I think there's a lot of upside potential in natural gas, and I think that kind of helps bode well with the theory that I think the large cap stocks are getting close to sell off and starting something big to the downside.
Now, does natural gas have anything to do with long-term outlooks for the winter?
It probably does, but I don't really look at it too much that way. It's obviously you've got the Farmer's Almanac. You can go. It's amazing how accurate some of that stuff is. So there's probably front running that we could be having a cold winter. Last winter was very mild here. I think it was mild everywhere across the United States for the most part. Maybe there is. I don't know what the forecast is, but definitely stuff like that does factor in. You do see that with commodities. You'll see if there's a forecast it's supposed to be a good season for something. Usually you see prices drop because there's going to be lots of it produced. But I don't really go too far into it. I watch the price action and relationships to different asset classes during key times, during high emotional times in the market. That's when you get kind of the most accurate moves, is when everybody's either extremely greedy or completely in panic mode and they don't know what to do. That's when you find some of the biggest price movements and some of the most accurate and best timed positions, because you can really get a good grasp of their mindset. You usually want to do the opposite of the masses.
Well, everybody talks about these trading robots. Now, a robot shouldn't be feeling greedy or panicked, but I guess it's what you program into the robot, isn't it?
It is, and robots are based on price. So when the masses are all moving in one direction, depending on the order flow and the liquidity showing, robots, there's so many different ways that robots can trade and why they trade. So really, it's really hard to gauge that. But overall, when the market sentiment is all leaning in one direction, depending on the type of analysis you use, you can kind of pick up on it, and it starts to warn you that there's probably going to be some type of a reversal soon, and you can adjust positions based on it. But when there's low liquidity, these robots don't really, most of them, the high frequency ones obviously don't thrive, and the volume has been very light. It's been, there's just not a lot of volatility. There's not a lot of volume traded, and they really do need a lot of volume because they're going for, fractions of a penny, pennies at a time gains, and you need huge volume in order to turn big profits. So until volatility picks up and some strong trends get back into favor, that's when those robots really start to spark up and create massive runs in the market and to the upside and the downside.
Is that what happened to us last August? The robots took over?
Yeah, you could, who knows what it is really. All it is a giant wave of people who are kind of paranoid that the market's going to roll over. They've got their sell orders in place, and as the market falls and hits those levels, it just triggers a wave of selling orders. And every time a new order hits the market and it pulls it lower, it triggers another batch of sell orders. So it just goes to show that when there's a wave of people selling, there isn't the demand there to pick it up. And this is the biggest problem. We've got like some of the lowest liquidity the markets ever have. There is no market depth. A big sell order goes in there and it just crushes the market. You can see these massive drops in price, and it takes a little while intraday for the price to move back. So once big money starts to flow out of the market, I think we're going to see a very waterfall, precipitous type sell-off where prices just kind of roll over, they pick up speed, and they just free fall like August. And it could be really scary. Just nobody's going to want to be owning stocks or holding stocks, which means they're not going to have buy orders out there until prices are way lower than where they are now. And the wave of sell orders is going to just crush the market. I have a feeling most sell-offs are going to be, a 1 or 2 week sell-off, but we're going to see these massive moves like we saw, in 2014 in October, last year in August. We saw another one in January, and all they are is 4 or 5 days, and the market just gets clobbered and drops, 5-8%. It's very severe, and I think that's what's going to be happening more and more. You kind of have to get in place and try and get your position and hope you've timed it right, because the drop happens so fast. By the end of one day, you've missed a huge chunk of the move. The market becomes already over in an extreme situation. It's really hard to enter a trade and chase it because, we've been having so many knee-jerk reactions where you get one big down day followed by another big up day. The market is making it really tough. It's trying to shake everyone out. But these drops, they don't give you a really second chance. You have to chase it, jump in, ride that momentum down quickly, and then get back out.
If everybody is so scared of this big drop, where is the money coming from to prop up the market right now?
Yeah, there's all because there isn't a whole lot of kind of liquidity in the market. I think it's just a steady stream of people buying shares, and obviously we've kind of got the markets seem to be propped up with all these different forms of kind of quantitative easing where money's kind of flowing in, but investors keep piling into the stock market, and it's almost like there's just people aren't willing to sell anything at the current price. They say, well, if it keeps rising, I'll sell it at a higher price. So the markets just kind of slowly grind and work their way higher. And every now and then we get these big bouts of selling where we see these big crashes where huge, who knows who they are, big institutions or funds, whatever it is, with big waves of selling, unloading shares. And there's a lot of fear in the market slowly creeping into it because we are seeing utilities have been on fire. They're one of the top performing sectors this year. And just recently, just in the last week and a half, we've seen utilities sell off really sharply. We've seen the SP 500 move up to new all-time highs. We've seen the VIX hit multi-month lows again. Very similar setup to what we saw last mid-April. And what this is telling us is when everybody's moving out of utilities, which they have been fairly drastically over the last week and a half, and the stock market makes new highs, that goes to show that everyone is bullish. They're getting rid of the easy, safe haven kind of plays, and they're just piling into the stock market. And because the VIX is also trading right down near some significant lows for low volatility, everything is pointing that I think we're going to see some type of sell-off either by the end of this week. We're going to start to see a big down day, or next week we start to see some pretty heavy selling in the market. And that kind of coincides with the cycle tops that I have and the short-term chart of even natural gas. I think we're a couple days away from it finding a low and then reversing up and having a significant rally.
We'll have more with Chris Vermeulen right after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what kind of a cycle do you see with oil right now? It's still hanging in around the $40, $42 mark.
Yeah, it's doing pretty well. It's been in a down. We've had a downward cycle on it really since mid-June. We saw everything kind of roll over, and we have a continued downward cycle pretty much until where are we at here? Pretty much September 31st. Is the bottom of the cycle analysis that I have. And we do have another probably week of rising prices in crude oil, or at least sideways trading, and then we kind of move down into a shorter term cycle again that'll pull us all the way down to the end of September. So I do feel as though crude oil is going to be under pressure. The candles, the price action in the last couple of days, we had a nice pop-up, a little bit of a reversal down. It looks as though the market might be kind of starting to top out here, crude oil. And I do feel as though we could see it continue to move down and test $36 or $34 a barrel, which is a pretty significant drop from where we are right now at 42. Based on cycle analysis, and price action with Fibonacci extensions, it's getting us right down to those critical levels. And those critical levels happen to be significant low that happened in April, a breakout that happened in March, significant high from February, and a support, and then also a breakdown level back in December, January. So everything is measuring up that crude oil is going to continue to have more downward pressure. It's going to drop, I think, from $42 a barrel today all the way down to 36 or 34. And I think that could really help get the stock market to roll over and start to fall in value, because the energy sector will get hit very hard. The energy sector is a pretty big chunk of the equities market. It has a lot of weighting to it. So, and if you look at the energy sector, it's been putting in a sideways topping formation here for since May, really. And when it breaks this pattern, it's going to have a significant drop. Right now, it's trading at $67 a share. The XLE energy sector ETF, it's at 68. I think it could collapse all the way down to 60, which is a significant support zone. It's also a measured move. using Fibonacci extensions. So I think the markets are very close here. We're a week away from a potential top, and we could see a multi-week consolidation or pullback in the stock market in general at minimum. And it could be the trigger or the start of something much larger potentially also.
Gold seems to be hanging around the same mark right now, some days trading sideways, a little bit down, a little bit up. Do you see any major moves for it in the near future?
A lot of I continue to see gold trading sideways here for probably another month or so. I think we could see it oscillate. It's trading. I think we could see it pull back a little bit more even, but I think it's going to trade between the $1,300 and $1,375 per ounce level for another couple of weeks here. And then I've got a big cycle kind of movement. It shows a cycle to the downside, but from the looks of it, it looks like it's going to have a cycle skew, which is what we've seen pretty much since late last year. And cycle skew is whenever we have a downward cycle in a commodity or an index that's in a bull market, instead of the market pulling down with the cycle, it just continues to flatline and trade sideways and continues to build a base, a launch pad for the next move. So when that cycle eventually does bottom and start to turn up, we see a very strong rally out of that. And we've seen that happen twice in the last year for gold. These big downward cycles, we've seen gold just rally up, chop sideways for several months until that cycle bottoms, and then boom, it starts another leg higher. And that's where we're at right now. We're just kind of letting gold, it's trading sideways until this cycle bottoms, which it technically doesn't show bottoming till the end of September. And then I think we could be off to the races. Now, if the stock market crashes first, starts to sell off in a big way, which kind of looks as though it could happen, then we're going to see this cycle probably change, and we'll see precious metals in general, along with mining stocks, explode to new highs and start a multi-month run to the upside.
Yes, usually when stocks are going up, gold goes down, but over the last few weeks, I've seen both go up at the same time, both go down at the same time. Is that unusual?
It's not unusual, but typically we see that either money's flowing into stocks and out of the safe havens, or out of stocks and into the safe havens. And sometimes when the market doesn't know what to do, we kind of see just a day of selling, broad selling. All the stock indexes are down, commodities are down, everything's down. It's almost, and then vice versa. And those are just days of the market is kind of confused and everybody's kind of rebalancing. Nobody knows what's going on. They're just kind of resettling, I think, their accounts. And that does happen. What we are seeing here, though, is gold is holding up well. Bonds are holding up really well. Utilities are looking like they're ready for a big bounce, either like tomorrow or in the next 2 or 3, I think, trading sessions. XLU looks ready to bounce. These are all safe havens. They've all been holding up while the stock market is going higher, which tells me there's a lot of smart money continuing to stay in those plays because they're anticipating some type of sell-off in the stock market. So I think we've seen them move up together, but overall people are positioned waiting for some news event of some sort to trigger a sell-off in the stock market, because once it starts to the downside, I don't think there's going to be a whole lot stopping it this next go-around.
Why do we have to wait for some news event? Do humans need some particular thing to fascinate them to make something else happen on the markets?
Yeah, I believe they do. It doesn't you go back to all the different bear markets back in time, and there's always some big event that, people pin to that bear market, that market crash. They say, this is what caused that bear market. But, if you go back and you look at all the technicals in time, you can see these bear markets, these market tops unfolding, 6, 8, 12, 18 months in advance. You can see the market weakening. You can see all the early warning signs that things are overextended. It's just a matter of time before the bubble pops and the momentum shifts to the downside. And it does take an event. It needs people to get scared, and people just naturally pin that event to that bear market, even though, in most cases, sure, that event had a part of the bear market, but it was already happening well in advance of that. It's just something for people to be like, wow, there's a lot of bad things going on. This is bad. I want to get out of stocks. So I think we're waiting on some type of event, something really negative. And if we don't get it, this market's going to continue to drag out. We're going to see the S&P 500, consolidate here over the next potentially month or so, and until we get some type of event, or until the momentum kind of really does shift to the downside naturally. Eventually, there'll be some piece of news that will trigger something. It's typically how it works.
Chris, thanks a lot for chatting with us.
Hey, thanks for having me on the show, Jim. Always a pleasure.
My guest has been Chris Vermeulen. His website is thegoldandoilguy.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.